Happy Friday, traders. It's 8:02 a.m. on Friday, the 16th of November, 2018. Thanks for joining me again. Again, happy Friday. Glad it's Friday. It's been a heck of a week. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment this morning, overall, pretty decent up day yesterday for the indices. However, the market's allocating to safety this morning on a slight basis. We had a big jump in gold. Gold's up 77 basis points and is trading near highs. Now 80 basis points, up $9.70. Also, crude oil. Remember yesterday I said that crude oil closed positive for the first time since October 26th. And it's positive yet again today. It's up $1.30, trading at 57.97 this morning, up 2.26%, pretty significant. The treasuries are up across the board, and the laggard today is the Nasdaq. The Nasdaq getting pounded on by the semiconductors. Nvidia reported yesterday, and it missed by a fairly wide margin. And it's attributing its losses to a huge inventory of Pascal chips um, that have not been moved, and mainly the crypto complex having been hit, and it was unable to recover. Of course, NVIDIA's video cards are the GPUs that are on those cards are were very popular for data mining. Very interesting topic, by the way, if you ever have the time to learn about how that works. It's quite fascinating. But the Nasdaq's down 66 and a half points, almost 67 points. Um, it was lower. The Nasdaq was actually down 40 points even farther than now, about negative 110 points on the session. So that's really the weight, where the weight comes from. The Russell's down about 10 points, 0.62%, and the DAX is down 66 and a half points. Now, yesterday, there was just a ton of chatter on the news feed. I mean, it was quite amazing from the morning all the way through the afternoon into the close. We had tons of drama on Brexit. Um, just a lot of no confidence vote letters and just a lot of speakers from a lot of releases from the UK Parliament, and and then we followed that with Commerce Secretary comments on China. That's the big pop that we received at about 12 Central, 1 Eastern. That the U.S. is not likely to raise tariffs by another 25% in January, and then that came back. That was denied later, and then there was further that came out and caused this drop back down, and it was just very busy in terms of news. So that really sloshed us around yesterday. In terms of what could interrupt our auction this morning, there's really nothing today. We do have industrial production in about 10 minutes in the U.S. We did get Eurozone CPI and CPI core, but going forward, the numbers that are in line to come in are fairly low tier. Things like Kansas City Fed, cap utilization, Baker Hughes, total net tick flows, net long-term tick flows. ECB's Draghi spoke this morning, and we have Fed Speaker Evans at 11:30 Eastern, and that clears the deck for the weekend. One more thing to pay attention to. Next week is Thanksgiving here in the U.S. Things are likely to really grind to a halt on Wednesday and onwards. A lot of people leave early on Wednesday. Wednesday is the most traveled day in the year. It's the worst traffic day of the entire year. And so just a lot of people try to beat that by taking off early. So I'm expecting that Wednesday is going to behave more like a half day than a full day. Thursday's a holiday here in the U.S., and on Friday is Black Friday. A lot of people just don't come back to work. You get basically 5 days off for the cost of one holiday for one day off. So just be prepared for that Monday, Tuesday, and then expecting the market to just slow to a grind after Tuesday into Wednesday. Okay. Let's take a look at what we expected yesterday versus what we got. Yesterday, the primary expectation to continue this one-time framing down, oh, wrong color, brother. Wrong color. Here we go. So we keep putting in these lower highs, and we're in this channel, and the expectation yesterday is that we are likely to pop up into the 2698 area, 2700, and then continue lower with the key target being the 2652 and 2657 and 2650 below. That's the low volume node on the composite. The secondary scenario, which is what worked out, is a push down into 2666 for a squeeze back into the range, and then we start to drift back into 2750, with that being the key target. Of course, it ended up pushing a little bit higher, but we had scenario 2 yesterday. So here's what it looked like. Remember, I said 2666, which is right here. We didn't quite get there. We pushed to 72, 71 and a quarter, and then we pushed back in. We got our push back into the range. We tagged the point of control 2703, pulled back to the mid, and then the China news comes in on this bar. You can see that the volume just kicks up, the delta kicks up, and then we push back into 2727, and we exceed it by pushing into 2736, the 3675. Then the news was refuted right in this bar here. The book was extremely thin in ES all afternoon. It seems like the news just blew a bunch of algos out of the market, triggered a volatility breaker of some sort. I just saw the book just collapse yesterday, and it was double digit up and down, 30, 60, 80 lots instead of 300, 400, 600, even in a volatile market. So we test back, and of course we test back where we test back to that high we put in the morning, 2710.75, comes back, retests. I thought we got to 2711. That says 2711.50. It's kind of interesting. Okay. So it retests this initial resistance, becomes support, pulls back, and then we close strong. Close strong on a session, but we never actually move the point of control to the upper range. But we do have a double distribution. We do have a double distribution, very clear neckline, and that neckline is that 2711 area, and our low, our overnight low tested that by a couple points last night, and so that's where it stands right now. So strong finish on the day. However, overall, we really didn't change the one-time framing. So this is our composite. This is a chart that shows a bar for each day for the day session only. for the day session only, and you could see that once we hit that high, 28.1750 on the retest, 28.19 and a quarter, you could see that we basically had this one time framing down, very orderly sell-off in this really beautiful channel. And where did we end up yesterday? We end up coming back right to that 27, 27.50, 27, 27.50. That number shows up in my dreams these days. The most traded price for 2018, composite high volume node, and it's also the high volume node of the most recent auction involving the gap up, which, by the way, this composite gets eliminated now and gets shifted back to incorporate what's below it since we filled the gap. So this composite goes like that. And so that's, we're still, my point being, we're still one time framing down. We're still making lower highs, lower highs, lower highs, lower highs. That has not changed. The day we break, this lower high sequence, just be careful with the prior day's high. It's likely to cause a flush, push, pullback, and consolidation on that day. It's a normal market behavior. So that's enough of a review. So that carries us into the overnight session. The overnight session, we open back up and we basically drift downwards. With the market accelerating down. The European session actually was kind of slow until Draghi started speaking right here, and then we started to drift down. We are tangled up with the session mid. The profile is quite boxy, quite Gaussian actually. The low is weak. Overall, the overnight session had pretty good volume. It had about twice the mode or the expected or the most common volume for the session at 270 or so, 270,000. The inventory overnight is short in price and in delta. So the expectation this morning is most likely responsive up, which is likely to fail. So if we take out yesterday's high, today could be the day where it flushes up, where we get a small spike up before we rest into the weekend. So that's the normal pattern for this. Now let's look at what we have for today. Of course, before we do that, I want you to take a moment and find the like button because it is Like Friday. So find the like button and click on it. It may require you to log into your Gmail account or Google account. To do so, please take a moment and hit the like button. If you don't see it on your screen because you're on my website at Convergent Trading, just find the YouTube button at the bottom right of the video. Click on it. It'll take you to the direct connection, the direct video, and then you can find the like button there. Cool? Cool. Now we can move past that. So here we are. We are at 27.22. We have come back and we are basically at the mid of the range. The value area is not really valid yesterday. What's important from yesterday is this low volume node that becomes the over underline, which ties in nicely with the overnight session. The expectation this morning, open auction, we are in range. A push down, a market that pushes down. I'm looking for an impulse up, consolidate, and take out that weak high from yesterday. And I expect it to flush up. Now notice that up here, the stock zones are really clustered together, and they're built on the structures over the last few days. You can see how they're clustered together. So once it spikes up, I expect that it's likely to struggle to push its way through and then likely to fall back in. There's a fair amount of resistance above. Of course, none of that is, that's all barring news. The news trumps everything. No pun intended. The secondary scenario is it becomes responsive to the close right away, pushes that, and then butts its head against these levels, and then we get responsive after that. So we end up with a push that goes higher. The key element here is, do we break through this low volume node? If we do, then I'm looking for a retest for a chance to get short, and then we start making our way down into the point of control we left behind yesterday. Very valid point of control there. And we're back to yesterday's open at 2689, 2700 area on scenario 2 and 1 actually. 1 can extend down as well. The range has been pretty wide. And so that's what I'm looking for. The tertiary scenario, the third scenario, is an open, push down, impulse, up. So we got an open test drive that consolidates for a while, flags out, and then starts to just squeeze through these areas. There's going to be a fair amount of resistance, but we might get into a short squeeze as things look like they were turning. One of the big things yesterday that I didn't talk about, which was important actually, a strong factor that was driving how I was viewing the market and trading it, is the delta. The delta yesterday, where is that image? The delta yesterday, take a look at this. I'm going to put it right over here. This is the delta broken down by participant size. Okay, so I'm going to stretch this out and get fancy on you here. Okay, look at that delta. The delta yesterday, the bottom pane, so the bar chart at the top is the S&P on a 4-tick Renko. This bar chart is a total delta. The white is the large delta. These are everybody bigger than 5 lots executing, and this is using tick ID data, so it's accurate in who's participating. This is not the same as what you would get on your broker feed. You need a special feed for that. And this is a small lot. These are 5 lots or less, okay? And these are the very large lot, which are greater than 200 lots, and how they're participating. And yesterday, while we fell below the open, which represents a zero line on the delta, while we fell below the open, we made a lower low, and some people call that a divergence there. I don't look at delta that way, but the market was very quick to find aggressor buyers all day yesterday. So as price was sitting back near the open, this bottom here, this delta right there, this price right here, or the delta volume, should have been near zero, as price was near zero, and you could see that it was not. As the delta pushed, as price pushed way below the open, the total delta was around zero. There was a very strong buy skew yesterday, and I kept warning divergence traders on it throughout the session. Really important to note that that there was just from the very beginning, there's just a lot of strength to yesterday's aggressor on the buy side. So the market was really looking to buy very early on. I don't know if they had the news on China or what. And then on the close, we had pretty strong participation by very large lots, and we continued to trend into the close with the delta. The delta figure at plus 45,000 has not been seen for a long time. It is, once delta crosses a certain threshold, I haven't recalculated what it is. I think it's around 34,000 on the positive side. It becomes basically a trend day. This is basically a machine type buying spree that just does not stop. So very interesting thing, a very interesting clue that we got early on. Anyway, I'm way over my time. Have a wonderful Friday. Have a great weekend, and I'll catch you next week early on. Take care.